Driving over to the auto space, the country's #1 car maker, Maruti Suzuki, is eyeing 2 million unit sales target by 2020. As it gears up for the battle, Maruti is hoping that its attempt to break out of its traditional low-cost offerings will fare better than its past failed experiments. Ronojoy finds out whether the company's premium strategy is working and if Maruti still has the appetite to cross that 15 lakh rupee barrier after the steep price correction of the S-Cross.
Maruti is hoping history doesn't repeat itself as it makes another push to break out of the value for money segment. Around 8 months after the launch of Maruti's premium crossover, the S-Cross, retailed through its new premium dealership, the Nexa course correction is underway. Maruti had to quickly take a steep 2 lakh rupees price cut on the 1.6-litre S-Cross offering to revive demand. Though bookings since then have jumped over 30%. Questions still linger on whether customers are willing to shell out up to 15 lakh rupees on a Maruti offering. On its part, the company maintains the price cut on S-Cross has not changed Maruti's future premium plans.
Our plans are going as per what we had decided earlier. It was just in this particular variant that we, this thing had that disconnect with the market perception and what we were thinking. So once that correction is done, we are going ahead with all our original plans. You see, there had been concerns in the marketplace that Maruti Suzuki has leadership in the compact segments. However, we are not present in the premium segments. So addressing that kind of a concern, we thought that we should get into premium segment and we should get into it with a big bang and with a great premium product.
Maruti's decision to lower its dependence in the small car category and increase focus in the premium segment is not hard to understand, especially at a time when the share of small cars in the overall Indian car market has been slowly declining. Also, apart from that, remember, starting 2017, Indian cars will have to meet stringent safety norms as mandated by the Government of India, and thereafter will have to meet stringent BS6 norms. All of that are going to make small cars that much more expensive, thereby blurring the line somewhat between a small car and more premium offerings.
Brand experts argue that the company's premiumization drive may not immediately bring results, as it will take time for customers to accept Maruti as a premium manufacturer.
There is no reason, certainly as far as technology goes, or the fact that Maruti as a brand, why it must reconcile itself to being always a value player. And I think but that transition would take time, and if there is a certain amount of patience and there is a consistency of effort. I mean, in the very early days, Maruti had a Grand Vitara, at a premium price point, and then they downgraded the product and essentially eased themselves out of that segment.
Despite the hiccups, the company is confident of the Nexa strategy. Till date, Maruti has sold 60,000 units to the Nexa platform, accounting for about 8% of its overall volumes, which the company says will reach up to 15% in the coming years. Though Maruti is the first Indian car maker to experiment with dual dealerships, experts say that it can look at Royal Enfield's models for lessons.
A brand like Royal Enfield, which if you go back and look at its imagery of the Bullet days, of being virtually a rural imagery associated with Royal Enfield, and to what the brand is today. And you see that successively they have moved up the brand, not just in terms of price points, but in terms of imagery, in terms of who gets to buy the brand, the degree to which it is coveted. It has managed to make this transition.
Over the next 12 months, Maruti will invest heavily to double the premium showrooms to 250 across 100 cities as it eyes the 2 million target by 2020. In New Delhi, Ronojoy, Banerjee.